Hey guys, happy Wednesday, and wow, what a day it was. This is a day like today where NASDAQ was down like 3%. Here, we'll go over to Q's. 3.6% is something you only see rarely, even like in bear markets, a couple of times, let alone in a bull market. So yeah, I mean, this was a huge, huge down day. And this whole last week, just relentless selling. It's pretty wild. The Mag 7 stocks lost 2 trillion in market cap over the last 7 days, as well as today lost like I think it was 600 billion or something today alone in market cap. So I mean that's huge, relentless selling. So before we get into all of this, I want to read a quote, a very famous quote, and it's from one of the greatest traders of all times. And it's by Paul Tudor Jones, and it says, "Where you want to be is always in control, never wishing, always trading, and always first and foremost protecting your butt." And so then we kind of want to break this down a little bit. Never wishing, so I often hear people say, I hope this, I hope that, I hope this will go up, I hope this will go down, and blah, blah, blah. And it always pisses me off so much because there is no hope in a strategy, right? I mean, you trade your edge and that's it. And so, and it's a probabilities game. I don't hope for anything. All I know is that something will happen. Something. Always trading. So that is, if you have an edge, you trade the edge, no matter what. Trading is a game of probabilities, just like a lot of things in life, but especially with trading, it's a game of probabilities. I do my best not to pick and choose, the trades I enter, just like a casino doesn't pick and choose when somebody sits down at a blackjack table or roulette or unit pie gal, which is a really fun one. They don't choose any of that. They have it's set that I think it's like 52% of the time or whatever it is. It's set that 52% of the time, some number like that, they win. So the more you play, the more people play, then the more money that casino will make. And the same is true in trading. So if you have an edge that, let's say, your success rate is 60%, you want to take as many trades as possible that fit that criteria, because over time that will guarantee more money and more success. And always protecting your butt. So this one's super important. Position sizing is extremely important. Position sizing I think is a little bit different for everybody. I don't think there's one way to slice it. I typically like to add to positions in thirds, typically. And then also, if overnight every single position in my portfolio went to zero, it wouldn't crush me. So the probability of that happening is like almost zero, but it's not zero. I mean, it's almost zero basically, but it's not really. So again, and hedging positions, like yesterday, I hedged tech stocks. I had hedged NASDAQ, went short NASDAQ. So we'll get into that one today. I did a lot of futures trades today. I didn't think that I would. But there was opportunities to take. So I did. Nothing exciting. No exciting trades really. In hindsight, I should have shorted more futures, but I didn't. But anyways. So let's go over what I did today. Should we just start with futures? Yeah, we'll start with futures, just get it out of the way. So this morning, just to start, I started off with micros at 750-ish. Oh, jeez, look at this, man. Where was this? Four one four. Is it down here? 414.5. 414.5. Okay, so right around in here. Oh yeah, okay, so it's around 750. 414.5, and then sold at 433 up here. So that was $37 a contract. And then over to Dow. So Dow at 8:40 in the morning. So 8:40. Oh yes, right in here. 8:40-ish. 265. Oh yeah, okay. So 265, I started this position 265. So either here, one of these. And then I added down here at 256. And then I ended up selling at 277. So like right in here. So that was $165 per pair. Then over to Russell 2000 at 910-ish. So 910-ish. Right in here. 2257.5 and sold at 2258.7. That's almost a whole point. That's like $60 per contract. Again, these are super short, quick trades because horrible price action. So I just took what was given. And then YM. So this one, prior to placing this trade, I figured I was going to have to be willing to let this one kind of ride for a little bit. And so I was adding to this one on the way down. So the first one was placed, okay, so 930-ish, 298. So 298 right here. Then the second one, 279. So right here. And then I added a third time. This would have been like the third and final time I would have. At 251 down here. And this is, I kind of figured that was it. If it would have gone down any further, I would have got out, but right around here is kind of anywhere from where I started this position, which I could have seen support being around here, to like here and down here. So I'll add where I think that those, as support. And then I ended up selling that 287. So 287 right here. And so that would be $165 per pair. I know that math's a little bit confusing, but on, one of the contracts, it was like a $55 loss on this first one, and then, the second one was like a $15 gain or something, and then the last one from 251 up here to 287 was like 180 or something. I don't know. But anyways, yeah. So that was it. That was all the future. Oh no, I lied. There's one more at 1040. Oh yeah, this one's a little ridiculous. 272 1040. Where is 1040? Okay, right around in here, somewhere. 272 279. It's $35 a contract. There's no point in talking about it. So with the futures out of the way, good day for futures. Placed kind of a lot of trades, and they were pretty quick. Certainly not a trend day, at least not in the up direction. Anyways, okay, so that's it. That's out of the way. Now let's go over what I did. So I sold out of Clean Spark today. Unfortunately. Oh man, this one was so good. And see, this is a perfect trade to go over. This is a great learning lesson for me. So, and hopefully for other people as well. So this trade was placed on this day, right at the open. As soon as this gapped up, I placed this trade. Great day. Very next day hits $20, and this from here to here, I forget the percentage gain, but of the underlying, it was something crazy like 15%. I think 11% in a single day. Right, and I forget those contracts, how much I was up on those contracts, but it was substantial. Because if you get that, like 11% move in a single day, and you're holding call options, and that is a huge gain for those contracts. And I said, on that video, that $20 right here is a perfect price target to get out of. And it's clear, obvious resistance. And I decided not to because of my opinion of the basically the underlying asset, which is Bitcoin. And so I let my opinion shape my strategy, right, and what my edge is. And so a strategy is not hoping that something will run farther, right? That's not a strategy. I didn't sell here for reasons that I just went over. And even this second day, I was like, dang, it hit 20 again. There's a chance to get out. But again, I let my opinion dictate what the strategy is, and that's not good. That's not good at all. So anyways, I sold out of this today, $3.45. So that was a decent loss on that. I don't know if I have it written down on here, what they are. September 20th. Oh, 365. Oh, to 345. Okay, so I guess it wasn't as bad of a loss as I originally thought it was. But I think I did add to it. Oh, I for sure added to it on one of the days. So, anyways, yeah, great learning lesson on this one. And then we also had discussed the moving averages in here, how they're twisted like a rope, and how it's not good to place a trade when they're kind of twisted like a rope here. And again, this is something that I kind of just read. So, I don't have enough data. It's not something I've really looked at enough. However, this guy is wildly successful and has been in the industry and doing this for decades. So, he would know. But the way that I like to trade is so you get like a big run up and then some sort of price consolidation. That's always good. But anyways, okay, so moving on. So then we'll talk about my hedge. So I was hedged in NASDAQ. This was placed yesterday. And it was calls in SQQQQ. I think this is a 2x leveraged short for NASDAQ. And so that was like a 90% gain on that one. And I closed that trade out. I closed it out. So it's 90% gain on that. But it's a hedge, right? So like I said yesterday, it's not like you want your hedges to work out, But luckily, well, I guess not luckily, but thankfully, I did hedge the portfolio pretty heavily today. So that was good. What else? Oh, I sold out of Japan. This selling is just, that's a lot of selling. So I sold out of Japan. So 114 is $114.99 is the average cost basis. I sold at like 112 or something. Oh, not 112, 109.37. So yeah, that's pretty violent, right? I've no interest in this. It could absolutely work, but it's below the 50-day moving average on heavy volume. That is when my edge diminishes significantly. So then, oh man, what else are we gonna even go over? I'm still in PAVE calls. This is down big today. Everything was down huge, right? I filled this gap here, so that's cool. I'm still in those calls. Emerging markets. I'm still in emerging markets as well. I have a full position size on in this, but I have as much exposure to this as I had planned on getting. This is not anywhere near the normal size of if I go long Dow Jones or NASDAQ or whatever. So, I'm going to give this some time to work. So we're still in those calls. Those are September 20th, $43 strike price. $1.25. Those are currently 75 cents. Let's see, moving on. Silver. Man, silver, gold. Hello, come on. Let's do something. Yikes. Man. Gold. See, strange day for gold. Really strange day. This is something that yesterday I said that would actually be good to go after, and I wrote it down, and I did go after this right away in the morning, first thing this morning, with calls in GLD. First thing this morning, like right here at the market open. And this was working fantastic. And there was a gap up here that it couldn't even fill and started rolling over pretty heavily. So I got out of this one for a few percentage loss. It's kind of a bummer on that one. So moving on. So Dow Jones. Oh, let's go over Dow Jones here later. Still in calls and Nasdaq. If I wasn't fully hedged pretty substantially today, I probably would have sold some of those calls, but we're still in these guys. Crazy day. Jeez. All right, so then now let's go over to Dow Jones. So Dow Jones. Oh, and the other thing, so Nasdaq, I saw something where some talking head was saying this is a normal, healthy pullback in a bull market. I would completely disagree with that. I don't think anything about this is normal and healthy. We've had massive gap downs, huge volume, all sorts of selling. Last week I think was the worst week for stocks in like 14 months or something. I forget, 14 or 11, whatever it is. Today was like the worst day in over a year, So I don't know if that's how you could consider that normal or healthy. Nothing about this is normal or healthy. Now this could completely turn around, and I think that it can, and we'll go over as to why here. So now we'll go over to Dow. So yesterday I had initiated a starter position in this Dow Jones. And I'd said on the video that I would have to be willing to take this a little bit below 400. And so I was already mentally prepared for a move like this, right? And my position sizing was, fit for that strategy, right? And I didn't do anything too crazy. So Dow Jones so it just broke out to all-time highs and has pulled back. Okay, same thing with XLF. So financials. I think home builders as well. Yeah, so home builders. So this is a home builders ETF, and there was some data that came out, new home sales down. Home sales have been getting slammed, and yet home builder stocks are acting fine. I don't know what else. There's Russell 2000. Russell 2000 is kind of finally getting into gear. Finally. It's been like 2 years or something. Finally getting into gear. Regional banks. Look at this. Regional banks. And so this is a huge move up. Good volume. And that's very significant with Deutsche Bank reporting earnings this morning and down huge, massive losses on their commercial real estate. Just so funny. It's like, what is the number one issue right now? Commercial real estate. And what if all of the biggest banks would have the largest exposure to commercial real estate and like not even hedged? Deutsche Bank. Like what shocker that would be, right? It's like guaranteed. What's the worst performing asset right now? And you could just guarantee Deutsche Bank probably has the most exposure to it. Look, this is ridiculous. This is absolutely ridiculous. What a horrible the risk management of Deutsche Bank this is probably like the worst you could ever see. What would be worse, like Credit Suisse maybe? This is insane. From 2007 of 160 to $16. Never ever recovered. that's unbelievably horrible risk management that in 10 however many years, over 10 years, they can't figure out. And no wonder why their losses of commercial real estate are like the worst of any large bank, you know. It's like, well, because they're like the worst risk managers. Okay, so that was a side note. Okay, so all of that is to say, so Dow Jones looks kind of like a normal. This looks like a normal pullback, to me. Although it is kind of violent, a little bit, right? But I'll give it a little bit of leeway because of just the selling in tech stocks is just unbelievably huge. That's pretty wild. So I'll give it some leeway, but like everything that we discussed, regional banks bonds are still fine. Although they did have a pretty sizable down day. Yeah, you know. So if everything was rolling over, then I would be very concerned that the bull market is in fact over. But until that happens, I still think the bull market will continue. But again, that's just my opinion. Anything could happen, right? But so for all those reasons I just laid out, home builders, regional banks, small caps. Let's look at mid caps. Yeah, I mean mid cap just broke out to all-time highs. I think, right? Is that all-time high? Yeah. So it's just pulled back. You know, no crazy volume, right? So, yeah, it's some other news. I mean, yes, Deutsche Bank, OpenAI is expected to lose about $5 billion this year. That's something that I did not know. They're blaming it on cloud computing and model training. That's pretty wild. It's in $5 billion. Something else, the Qs over the last 6 months, they're slightly below its mean. And this is data going back about 6 months. And I read a quote that I don't have the book near me. And the quote goes something like the only law of physics in financial markets is mean reversion, or something along those lines. Something like that. Is prices will always revert back to the mean. So anyways, it's right there, a little bit below it. So that's something I wanted to mention. Now let's go over earnings. We're in the thick of earnings season. Markets are tanking. Canada, the Bank of Canada cut rates for the second time, and they said more to come. I'm torn between if I think cutting rates is going to be bullish or not. There's never been a time where it has been bullish. It's always been the other way around. So, you know, all these people that are saying this time is different, based upon what? Like, you know, now, okay. Typically what the Federal Reserve does is they cut rates into a shrinking economy. Now, the argument for why this time will be different is because they'll be cutting rates into a growing economy. So I could see the argument. I don't have an opinion fully formed on if that would be bullish or if this time would be bullish or not. But what I do know is that every time that they've cut rates, the stocks have fallen. So, right? I mean, didn't the Fed start cutting interest rates in like 2007, right? You have COVID. They start cutting rates. Markets are tanking, right? So it's the Federal Reserve. They're usually kind of reactive to things. It's like any other government, pretty reactive, right? So anyways, I'm torn between that. I don't know if somebody has an opinion, let me know. I've could definitely do some more research on that. All right, so moving on. And the other thing is a normal, healthy economy should have positive real rates. They shouldn't be zero or close to zero or negative, right? Like, it just shouldn't be. So this whole obsession over like low interest rates is strange to me. I do get it for certain things. Mortgages, loans. I mean, clearly I understand why, but in a normal, healthy economy, positive real rates are not bad. Okay, so moving on from that topic. Earnings season. So we're in earnings season. Let's go over some of the earnings that took place today. Chipotle. It's good to see Chipotle up. This has gotten absolutely slammed. It's up after hours. All of these earnings I'm going over, I didn't listen to the earnings call. So we're just going to go over what the market's reaction was to them. Clearly very positive reaction. Hopefully this can continue. Something that's important with earnings to note is what is of the utmost importance for earnings is the future outlook. That's what's most important. So hopefully they probably gave a good, outlook, right? Okay. That's really Ford. Down pretty big. You would expect them to be down big. Just car sales in general, right? Tesla reported earnings, car sales way down. I'm sure same thing with Ford. Again, I didn't listen to it, but clearly it's not like they performed well. I mean, this is down very substantially. They missed on earnings. I don't know what their future outlook was. Probably bad. Alrighty. Ford's not very important to the market or anything. I would say IBM, they reported earnings. This was received well, clearly. Yep. Some sort of earnings beat. Moving on to CLAC. Semiconductor that doesn't really get talked about as much. But very large company, pretty important company. Great reaction here to earnings, it looks like. So they closed 755, 783 they're currently at, somewhere around there. So let's see, 783. And I think that was it. What other positions am I still in? I'm still in Goldman Sachs. This is a pretty bad close. But anyway, still in Goldman Sachs. No reason to sell this. $459 is the average cost basis. Got out of CleanSpark. I'm still in Bitfarms. Still on this one. Super small position. I at least want some exposure to Bitcoin. Now, the one thing to mention with Bitcoin miners is they're reporting earnings in about a week, I think. After the halving, Bitcoin miners' revenues are basically cut in half. So that's something certainly to keep in mind. However, they basically run with Bitcoin, right? So as long as Bitcoin performs well, the miners will perform well, for the most part. Let's see. Marathon, they're down pretty big today. Jeez. Yeah, same with CleanSpark. So let's look at Bitcoin. Still above the 50-day moving average. I got that Bitcoin conference coming up. That is going to be huge. I think that's tomorrow. Oh, and that reminds me. So tomorrow, I'll be on vacation. I'm going on vacation for like 10 days or so. So I probably won't be doing videos every day, but I will try. I'll try. Maybe they'll just be shorter. Maybe I won't go over every single position like I typically do. I wonder if I need to do that. I wonder if that's just as like boring, to watch, right? Because sometimes it can get pretty long. Today I try to go through them really quick and talk about other things, something more of interest. So that was it. What's the plan for tomorrow? I'm gonna be on an airplane, so I'm not doing anything. Yeah, that's it. All right, guys. See ya.